Quite often when looking at an individual stock or an index, you're looking at fundamental analysis to make a decision as to whether or not to enter or to exit a market. Today we're taking a look at the basics of technical analysis, what to do and what to avoid. We're talking now to Thomas Light from Faraday Research. Thomas, welcome. Now I know you brought along a few charts to indicate to us exactly how you build up a picture for technical analysis. You don't use any fundamental analysis at all, do you?
No, it's 100% technical. And the form of technical analysis I use is price action trading. So it's just focusing 100% on the market price.
Okay, let's take a look at the first chart, which is a naked price chart.
Yeah, each trade I take, it will start with a naked price chart, which is basically a stripped down Japanese candlestick chart. So what we've got here are daily candles over a 6-month time frame.
The red meaning a down day and the green meaning an up?
Correct.
Okay, so you got your initial picture using the naked price chart. Give us an example of perhaps maybe what not to look at or how to clutter this.
Okay.
The next chart.
What most technical analysts will do is superimpose on the chart a number of technical indicators. Now, my view is that this clutters the picture a lot. What we have here is the 4 most common technical indicators: Bollinger Bands, MACD, RSI, and an oscillator. And you can immediately see this is exactly the same chart. You can see the picture is a lot less clear, and you'll have a number of indicators providing different buy and sell signals at different times.
So you, by rule, don't use...
Yeah, we don't. This is the exact opposite of what I do. I go back, strip it back to a naked price chart. Okay,
all right. Chart number 3. Let's take a look at the next one here, which is a dominant trading pattern. I think you've got a bearish dominant trading pattern here.
We have, yeah. What I'll run through now is using a trade that is actually still live, and we did on Monday.
Right.
And this is US dollar versus Canadian dollar. I'll just run through the basic 3 steps that I use to trade. Okay, so this is trying to establish the dominant trend in the market. Now, ordinarily, I will trade Forex from a 3-month chart, but to establish the dominant trend, I'll zoom out of the market, put it to a 6-month chart, which gives me added perspective. And you can clearly see here that the trend is bearish. It's moving lower through a series of lower highs.
Okay, so indicate what you're now doing at the moment. You've got this bearish trend in place, but the market looks like it's bottoming out.
It is, yeah. If we move to the next chart, we then zoom back into our trading time frame. So this is the 3-month time frame.
Right.
Now you can see the recent price action here is pretty choppy. We'd call that range bound. But because the dominant trend is bearish and the current price is towards the top of its range, this wouldn't stop us from taking the trade. Ideally, you're trying to match up short-term momentum with a dominant long-term trend. That's where you get your highest probability trade setups.
Okay, next chart.
Okay. I call this creating the market structure. Now, before I enter any trade, I'll put on these horizontal price levels.
We should just say this is the same chart that you had before, isn't it?
This is exactly the same chart, yeah. This is actually the 6-month version, so we're staying with the US dollar, Canadian dollar. Each market, it doesn't matter what the market is, will move to a series of key price levels. So here we have these 2 major levels, the one at the top representing the 2 major swing highs last autumn.
These 2 points here?
These 2 points,
Yes.
yeah. And the major level that we're most concerned with is this one here. And you can see the market was responding to it as a level of support initially, and now it's using it as a level of resistance. That is a bearish characteristic.
Okay, let's bring the next one into play now and see how this trade is put on.
So now we're going down to a price pattern. So at the heart of every one of my trades is a price pattern.
Right. So we're staying with the US dollar Canadian.
Yeah. And so we've zoomed into our trading time frame, which is 3-month chart. And here we have on Friday one of my favourite candle patterns.
Now this says here, bearish pin bar candle rejecting key resistance level.
Yeah. So this is a price rejection pattern that I use a lot, and when it occurs by a key market level, it has a very high probability of working. So what happened on Friday was the market initially surged towards this resistance level. It was then sold off intraday, closed negative on the day, and importantly closed near its intraday lows, hence forming the pin bar candle, sometimes called an inverted hammer candle.
Right. Okay. So that's that one, and the final one. Now this is a trade setup again, using exactly the same chart. What do you get out of this one?
So again, just running through the 3 steps, we've established the dominant trend is bearish. Okay, we've drawn on our key market levels, and we can see the market is responding to this major price level at the moment. We've then established that there's a bearish price pattern occurring, and it's from this price pattern that we can create our trade setup. So we put a stop above Friday's intraday high and above the major resistance level.
I was going to say that's this point here. That's the stop, right? Okay.
Yeah. So we're using the major level as a shelter against the market. We entered this trade yesterday just at market levels. There's no specific way to enter this pattern, and with a view of exiting the trade around the March lows. We wouldn't place a limit order to get out there. We would simply monitor the price action. Because the dominant trend is bearish, it wouldn't surprise me if the market actually broke below that spot 985 level.
Any indication at all about timing when you expect this to be triggered?
No.
So you just hold on to your trade as long as it takes?
We set the trade up, commonly because we're trading from a daily candle chart. We will be holding positions overnight, sometimes up to as much as 5 days. Right.
Interesting. Okay. Well, you've certainly helped us understand a bit more about price action trading and the means of technical analysis. But in the meantime, thanks indeed for coming in. That was Thomas Light from Faraday.
This film is for educational and leisure purposes only. Proactive Investors does not provide investment advice. The company is a publisher and is not registered with or authorized by the Financial Services Authority. Please refer to the full terms and conditions on the Proactive Investors website.